Turkish central bank has just announced its decision to keep interest rates on hold. Well, for more on that, let's speak to Ranko Berich, who is head of market analysis at foreign exchange company Monex Europe. He joins us live from London. Thank you very much indeed for being with us today. So that interest rate decision has just come out. Rates are staying on hold at 24%. What's your view on that move?
So we have seen inflation come down in Turkey from the sort of quite worrying sort of spike of last year, and that has to do, of course, with the fact that interest rates got moved up to 24%. It's unlikely that the Central Bank of Turkey is going to want to get ahead of the curve in terms of beginning to normalize policy as inflation comes down. And the reason for that is that they have a little bit of a credibility deficit because, of course, rates were on hold throughout all of 2017 as these inflationary pressures were building. And now that they're beginning to come down, I think what we're likely to see is a central bank that's behind the curve waits for confirmation that inflationary pressure has subsided before they begin to normalize rates in earnest.
Well, you mentioned inflation there, and in your view, have the measures that have been taking place so far been working, and what is the outlook?
So the outlook for inflation is that it's going to come down, in our view, below 15%, could go as low as 12% by the end of the year. That's certainly enough to give the CBRT enough of an impetus to begin normalising policy. So I guess from that perspective, the higher interest rates have begun to rebalance the economy. I think the main issues now are regional growth, which is going to affect, of course, investor optimism on emerging markets, including Turkey, and also the regional issues, so conflict, politics, so on and so forth.
And what's the longer-term outlook, do you think?
So in the longer term, the fate of the Turkish lira ultimately comes down to central banking credibility. In the past year, we've seen the central bank begin to again signal that it is willing to raise interest rates in order to combat inflation. Now, if that remains the case, then we'll see the lira begin to move back towards a lower trading range. However, if the next upwards inflation shock is met with, a hesitant response from the CBRT of the sort we saw in 2017, then we will see a return to those massive lira depreciations of the sort that we saw last year.
Okay, Ranko Berich from Monex Europe, thank you very much indeed for joining us from London. Thank you.